Oh God. Just 1 second.
Yeah.
ये क्या हो गया? Okay, 1 second. Some issues suddenly I've never faced this.
Okay, no worries.
Hi, good evening. We are facing a little bit of an issue on LinkedIn. Just give us a minute. Sorry, I'm I am yet to fix. I don't know why. Generally, I've never seen this issue. We have gone live on YouTube, but for some
Okay.
reason, I'm not able to go live on LinkedIn. Just 1 second.
Sure.
How do I do this now? Just 1 second.
Yeah. Please take your time.
Sorry, so there's some issue. I think I've sorted it now. Just give me a minute or so. Yeah. Okay. Hi. Good evening. Sorry about the delay. There was some technical issue. Thank you for joining in. Happy Holi. Today is also incidentally CSK versus GT match, and I'm really thankful that you took your time. All of you took your time to join in. But I'm pretty sure it's well worth it because we have Neil Parekh with us, the CEO of PPFAS. Thank you, Neil, for joining in. I'm sure a lot of people are excited to see you.
Thank you, Anand, and wish you and all the viewers a very happy Holi. I'm very happy to be here and interacting with you. So hopefully it's I can add some value or probably be a little entertaining for people who are watching this.
Sure. And it's a very cool ask me anything session, Neil. So I'm sure people will have some questions about PPFAS. Plus, they will also
Sure.
have some questions around market caps and overall strategy in place. And again, thank you for joining in. We had some bit of a delay because of some technical issues, and it's now sorted. So I know, again, I insist because I'm a big IPL fan. So I saw today was a CSK match, and I was like, okay, this is going to be bad for us. For people who have joined in, CSK is batting first, and I'm also a Dhoni fan. So, but I can pretty much assure you that it's all going to be worth it. So let me start with you know so what I've done, Neil, is I've actually asked people know that you're joining in today, so they have a set of questions that I've already sent to me. Plus, I'm sure as we progress along, there will be a set of questions that will be coming in on the live feed. I'll go back a bit and check on LinkedIn because sometimes the feed has some issues here, and I'll ask those questions, and you can answer those questions. So this will be about 55 minutes or so, and very happy to have you here again. Thank you.
Sounds
So
good. Sounds good.
while there are questions that will keep coming in, I'll just quickly check ones on LinkedIn if there is any question to open up. But I have some questions that have come on my WhatsApp channel. Just 1 second. Okay, great. Cool. So Neil, the first question that I can that I've seen that I see is what is what was your pivotal moment when you launched PPFAs? What changed things? I mean, because today you manage few thousands, 10 thousands of crores. What was that one pivotal moment that changed the life of PPFAs fund?
Um, yeah, so maybe I'll just go a little behind of why we launched the mutual fund. Just give a little bit of context to that. So it could be maybe what I'm going to say probably makes a little more sense. So we were a PMS provider. We managed money through a portfolio management services from 1996 to around 2012. 2012 is when we launched the 2013 is when we launched the scheme. We've been money managers for a very long time before the mutual fund, so about 15, 17 years before that. Now, what happened that time was the financial crisis had hit. It was 2008, 9, and that time we started thinking, US stocks are so that they're available at such great valuation, the overseas stocks, and we would
Hmm.
love to participate in these stocks. The PMS didn't let you participate. You can't invest in foreign stocks via the PMS. We're like, okay, what's another vehicle that might be useful for us, or where we could do this. So one thing was the mutual fund there. So two or three reasons happened that time when we launched the mutual fund. At that time also the PMS, the minimum investments were raised from 5 lakhs to 25 lakhs. Obviously, right now it's 50 lakhs, but that time 5 lakhs to 25 was raised. Actually, a lot of our clients were in that 5 lakhs to 25 lakh range. So either they had to top up to 25 lakhs or they had to withdraw their money. So didn't sit too well with us. And with the mutual fund, as you know, you can invest with 1,000 rupees. So that, and also it was very tedious to open an account. I mean, if I was in Mumbai and somebody in Guwahati wanted to open an account, somebody had to take a train all the way there, do the paperwork, come back, and invariably there would be a mistake, so you'd have to go again. So all these things led to us launching the mutual fund. Again, the overseas stocks, the PMS limit, also the direct tax codes were going to be coming at any point. We didn't know when it would come. We knew it
Hmm.
would come in the sense of the capital gains tax, that long-term capital gains tax will be long-term gains will be taxed. That came slightly later, I think, in if I'm not wrong, 2016ish or something. But
Right.
we were ready for that even 5 years earlier. We knew it would come at some point. And when that came, the mutual fund actually benefits as a vehicle of investment, because it's a pass-through vehicle. So when an investor puts in his or her money, they only pay tax at the end when they redeem the money. So if he holds the mutual fund for 10, 15 years, he doesn't pay tax and anything on that. As a mutual fund, we also don't pay taxes at all. When we buy or sell, there's no short-term capital gains for us. So the only one time the investor will pay a long-term capital gains if he holds for more than 1 year. While in the PMS, you would be paying tax on every buy or sell, short-term
Hmm.
or long-term. So the mutual fund becomes a better compounding machine. So So actually, that was kind of the one of the reasons why a few of the reasons why we moved to a mutual fund. So I think that was the pivotal part, to
Okay.
getting a PMS license. And in fact, if you ask me, even sorry, I'm taking a couple of more minutes here because it's quite interesting. Is that we were the only mutual fund that we were the last mutual fund to get in when the net worth criteria was 10 crores. As soon as we got in a
Right.
few months or a year or so, it had raised from 10 crores to 50 crores. So we were very lucky to get in at 10 crores net worth. If it was 50 crores net worth, we probably wouldn't have been a mutual fund actually. So I think that was a pivotal moment that we were the last one guys to get in at 10 crores. But as we moved along, I think one thing was that we concentrated on performance. I think that was one big thing that we were looking at. That if performance is good, I think flows will come. But this is a long game. In the sense that 5 or 7 years, just forget about any growth. So for the first 5 6 years, we're like, okay, we're not going to chase growth. We're not going to run after short term, anything that's short term. We concentrate on building a track record. If we are able to maintain a good track record, I think that there'll be that pivotal point that will come, that will make us where flows would come in. And I think that happened during COVID actually. I feel bad to say this, but yeah, I think the
Mm.
for us the flip happened during COVID, when because we were one of the only ones who were investing in international stocks at that point. And I think one of the things was the international stocks just ran away that time, because and that time we held the Googles and the Microsoft and the Facebooks and the Amazon, and that came into a big focus. Also, those are two things. One was the international, and the second thing is that we were sitting on a bit of cash. We were sitting on about 15-16% cash during COVID, where when the market went down, we were able to actually put, like, just invest 100% of our money in there. So a couple of these things led us there. I think we had cash because we were not finding great value at that point. So we said that instead of just putting our money in anything, might as well keep some cash, and if we get if there's valuation look attractive, we will buy into that. And you look, I mean, COVID happened. We didn't predict COVID happening, but it just happened, and we were sitting there. So it's a little bit of luck, a little bit of strategy in terms of getting into the international space pretty early.
So you got into international only in 2020, is it? It was not before that.
No, 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 no. We in fact, in 2009-10, before we were a mutual fund also, we were managing accounts for some of our HNI through the LRS route.
Right.
So after the financial crisis, that's the time when we started. In 2010 is when we started investing there. But that model is not scalable. Again, a lot of paperwork needs to be done. The client needs to be disturbed at all given times. If he's hedged the currency, then sir, margin call has come. Can you pay this much money? Which is quite annoying to our clients, to be very honest. They're like, listen, we
Yeah.
love this. We love that you're investing abroad, but give me a better way, give me an easier way to do this. When we launched our scheme, which was in 2013, is at that point we had about we were investing since the beginning in foreign stocks.
Okay. Okay. So now does the PMS continue to exist, Neil?
We do have a PMS license, but we're not really taking money in the PMS for the simple reason I told you, that it doesn't really make sense.
Scalable.
For us, it's like it doesn't make sense for if I have to give somebody an advice, Neil, can I put in your PMS or should I put in your mutual fund? Mutual fund would be my answer. So for that reason, we're not really selling the mutual with the PMS. So it's on for about 14 clients who are our international clients from, say, US or Canada. But and they've been legacy clients, so it's not like, so it's like basically for them it was hard to shift to the mutual fund for tax reasons or whatever reasons. So for them we're keeping the PMS on. Again, if we find a opportunity down the line to use the PMS, then probably we'll use it. So we didn't want to give up our PMS license, so the PMS license still exists. But I'm not advising anyone who's not American or Canadian to invest in a PMS, invest in the mutual fund.
Got it. Got it. So, good thing we are talking about mutual funds. There was one question that had come in. So mutual fund in general is considered a very low return investment. It's low on risk and so is on return. This is a consider. I mean, people assume that stocks में
Okay.
बहुत रुपया मिलता है, mutual fund में कम मिलता है,
Okay.
return भी कम है, risk भी कम है. I mean, this is a perception, right?
Hmm.
So one is a perception, right? That is one thing. Second thing is, I know for a fact that it is something that I've just about 1 hour back, somebody said, no, Anand, why are we doing only mutual fund? Why not stock? We can make more returns, right? So, how are you going to change this perception? Is there something that you as an industry, you and your industry colleagues, trying to change this perception? First of all, I mean,
I think the work we've done, or the whole mutual fund industry in general has done, should actually make them believe that mutual fund is a good way to go. It's very well regulated. It's extremely well regulated.
right,
Very low chance of you getting swindled or any of that. Your money is absolutely safe. And if you've read the news stream the last 1 month, you've seen every day there's some stockbroker or someone is getting caught because he's sold his unregistered PMS guys, or unregistered portfolio managers or stock pickers are getting have ran away with people's money. So
yeah,
one main thing is that, boss, your money is absolutely safe in a mutual fund. It's very well regulated. It's through the banking channels. We have to give information every day on how we've performed. The NAVs every day, about how your mutual fund has performed. You can get in at a very low rate, 1,000 rupees. And like I said, the main advantage, it's a compounding machine. You don't pay taxes until you sell at the end. Direct stocks, listen, if you are a good stock picker and you think you can do that better than a mutual fund manager or professional manager, go ahead, do it. I mean, I have no reason why you should not do it if you think if you're that good. But honestly, 95% of the people I meet or I see are just buying on tips, or buying on some very superficial information or stories, or what they've read somewhere in the papers, or because their friend has bought or their family has bought. So the FOMO is really high that मैं भी करता हूँ direct stocks. But to make long term wealth, you might make money quickly or luckily in direct stocks. But if you want to make long term wealth, then mutual fund is probably a better way to go about it.
okay. There are two questions now on that, Neil. One is, what is, I mean, if you want to disclose, what is the percentage of allocation of yours in stocks? That's the first question. Next question I'll ask you later.
My allocation, as in,
Your
sorry,
personal allocation towards stocks.
personal allocation towards direct stocks versus mutual fund.
Yeah, I mean, if you want to disclose it, that is up to
Yeah,
absolutely
yeah,
up to you.
sure. So I've got some legacy, 4 or 5 legacy stocks which was been handed down to me. So
Hmm.
I continue to hold that. But as uh, again, one of the things, like I was saying, it's so well regulated and all that. I am not allowed to, in my organization, no one's allowed to buy and sell individual stocks. So what I hold is what has been given to me, legacy stocks, which I can sell if I want. I can sell. I can't buy more individual
Right.
stocks. So one is that I don't think I bought a direct stock in 7 years or so. So what's
Okay.
been given down to me, that's there. But majority of my money, about, I would say, from my equity portfolio, about 90% is in mutual funds, which are PPFAS, and 10% would be the legacy stocks that have been handed down to me.
Got it. Okay. So around there's a question around regulations, Neil, right? So you said regulations are so good that it swindling away money and broking firms going bankrupt. All those questions are not even there in the scene at the moment, right? Now, the reverse or the flip side to that is, regulation also sometimes proves as a big hurdle to innovation. Do you also see that as a problem? Does it stop you from innovating? Because I've been in this industry for 20 years. I've seen few funds, but there's not like great innovation beyond equity, right? Is there a reason for
Mm.
that?
Does regulation affect
Innovation.
innovation, like you said? I think, look, the regulator's job is to protect the end investor as such, and I think they're doing a fair job in that. yes, is it 100% great? No, it's not. Obviously, nothing's 100% great. But are they doing a fair enough job to make sure that the smallest of the unit holder is protected? I think they're doing a fabulous job there. Is there micromanagement when it comes? Yes, there is some micromanagement, which is quite annoying sometimes. But
Yeah.
I think you gotta live with it. It's like, listen, it's like playing cricket, right? I mean, like you were talking about cricket. So today the two teams will be playing and they can't choose the pitch that they play on, right? Whatever pitch is given, they have to play, they have to bat there, they have to bowl there, and they have to win the match.
Yeah.
Again, for me, that's what it is. Regulation is like a pitch. You cannot choose your pitch. The pitch is given to you. You make the most to win it. So yeah, within that, can you do the innovation? I think sometimes you can. So I think for us, the biggest innovation that we did was when we came was nobody had this 65-35% split between domestic
Yeah.
stocks and international stocks. We thought that, wow, this is a great thing that you can marry to. We can have 35% foreign stocks and still get Indian taxation. The Indian equity taxation, which is more than 1 year you get 15%, less than 1 year 15%, more than 1 year 10%.
10%.
So we thought that was a great innovation, and yeah, I think if you find a way, you'll will figure out. I mean, yeah, I get your point. Sometimes micromanagement doesn't lead to that great of an innovation, but it's a pitch that is given to you, and you got to make the most of it.
Yeah. Level playing pitch, right? So good, you got about foreign 65%, India 35%. I think you are the pioneers of this investing style, and that has worked very well, very very well for your organization for sure. The question that one, why not outside US? I mean, have you thought of stocks in Europe? Have you thought of stocks in other Asian countries? Why majorly US or only US on your portfolio?
Yeah, so the mandate is clear. We can invest worldwide, anywhere in the world.
Hmm.
For us, we will not go beyond, say, North America, Western Europe, and developed Asia, which is probably Japan, Korea. Probably don't go down. So these are the things that we feel comfortable about. These are the places, the geographies that we will invest in. So in Japan, we invested in a Japanese company, which was Suzuki, which we had bought. Back in the day, we had a lot of European companies. We owned British American Tobacco, we owned Nestle, we owned Anheuser-Busch, we owned Standard Chartered. So in Western Europe we had investment. It so happened that right now, the best of ideas that we have, and obviously for the last 2 years we couldn't invest abroad also because
Yeah. Yeah.
the limits have been frozen. So I think right now our best ideas are in the tech sector, where we still continue to hold the Google, Amazon, Microsofts, and they are in the forefront of their innovation. You're going to say that what are the trends looking forward? If you're saying artificial intelligence, robotics, and all these things, they are in the forefront of it. Cloud computing, streaming versus linear TV. All these companies are at the forefront of that. So we don't see a better alternative than that. So that's where the investment lie right now. Will we go to very niche markets or markets where the rule of the law is not well taken care of? I mean, I don't think we'll go to China. China, you heard horror stories there, sometimes. And again, if you're managing public money, we don't want to put that at risk. Will we invest in some African countries or Brazil or Turkey or something like that? I don't think so. I don't think we have then you need the really ground level knowledge for these companies, or these countries, to really be part of that. And if you're not confident about the rule of the law, you're not confident that the political party will do right by you, then stay away from those countries. And even right now, our investments that are there are actually global companies. So it's not like we're taking a risk on, say, a country like a US. Though they are listed in the US, a lot of their businesses worldwide. Some of these companies only get 30% of the business from the US. Otherwise, the Google and all get worldwide business. So the preference to buy globalized businesses where you're not taking country specific risk, because you're already taking country specific risk by investing in India. So a
Right.
demonetization, a war with the neighbors, bad monsoon, drought, or any of those things will affect India. So that part of the portfolio will be safe. So again, when we're going abroad, we don't want to get into too many stocks which are only dependent on one country for their income. So the preference to get globalized businesses where they're getting revenue from all over the world.
Okay. So yeah, you are already answered a question which is zero on China for a reason. I understand. People said why not China? While I got that point, you already mentioned. Do you continue to be positive? Again, one more question was: Are you still positive about these US stocks that you just mentioned about US tech stocks, which you said primarily because of innovation? I continue to be positive about it. Is that
Yeah.
is that
Yeah.
how I should summarize it?
Yeah. I mean, if we had, if the limits were open today to
Hmm.
invest in foreign stocks, we would be buyers of these stocks. Let's put it that way. I
So
think they are available at a decent valuation. They're growing very well, and yeah, if we had the capital to invest more in these stocks, we surely would actually.
okay, okay. If you had the capital, so now, how do you create a business model out of this, right? I mean, every now and then RBI comes and says, "Ki ho gaya, time ho gaya." You cannot invest anymore and all this stuff. So, how does an investor now get into
Mm.
Parag Parikh? Let's assume that I am coming to Parag Parikh not for India, but because you're also giving me a flavor for of US and other countries, right? So,
Yeah.
how does one like me understand Parag Parikh? Should I invest? Should I not invest? How do you position Parag Parikh to me, the FlexiCap fund to me?
Yeah, so again, I think let's leave aside US and India and all that. In the end, the way you look at companies, the way you value companies is pretty much the same everywhere. So what we concentrate on is our circle of competence, which are we look at about 700 stocks. Beyond 700 stocks is not in our radar, So even
In
if anything
India?
is beyond our radar and it goes 100x also, it will not bother us. Sorry,
No,
you
in
want to
India
say
you
something?
said in India you said
It's
700.
about 500 in India, 515 India, and it's about 170, 200 in outside India.
Okay.
So around that would be our coverage area. So again, if whatever our circle of competence is, I think we want to be really good at that part of it. So we want to be on top of things there. So we don't want to spread ourselves too thin. I think the main thing you come to us is because I think transparency is one thing that we really believe in. I think if you're handling people's money, trust is all there is. I mean, today, even if 100 rupees of mine is lost somewhere, my heart
Mm.
starts beating faster, even for 100 rupees. So imagine if people are putting their life savings in something, they want to know what is happening. They want to know, they want to ask questions, they want to know where their money is going, how it's being invested, or what have you. So I think transparency is something is big on us. And secondly is prudent fund management. I think again, forget India and US or whatever, but I think you have a process set and we stuck to that process. We are not afraid to be in cash. We don't need to be number one every quarter. We want to be number one over a 3 or a 5 year period. That's our goal. It's we don't mind taking short term pain for long term gain. And not the other way around. And we've underperformed massively in our past, in the shorter run. But I think one thing we keep reminding ourselves, would we lose half our clients money, or would we lose half our clients if that's the choice? I think to us the choice is that we will lose half our clients, not half our clients' wealth. So don't do anything stupid on that front.
Mm.
Be very prudent about it. Yeah, there will be times where you're not joining the madness, or you're staying away from some of the hotter things that are there, and be
Mm.
ready to lose clients that time. Be ready that people will go for probably greener pastures or quicker money or what have you. So we will fine with that. So we don't need to keep generating something or the other in the short term, I think. And we've seen that in the past, that even when people leave you and they go And if they don't have a bad experience there, if they've had a good experience with you, a lot of them come back eventually. It could be a decade later, but they probably will come. So it's just, I feel just sticking to your roots, sticking to your fundamentals, sticking to what you believe is right is what you need in this profession, to be very honest. Yeah, there's no much rocket science else in that, you know.
Yeah. No, this is very true. Related question there, Neil. Thank you for explaining this trust part very, very beautifully. And I think there's a lot of learning for any new investment advisor joining in. And trust is something which is very, very important in this business. Very, very true. Neil, so you're the, if I'm not wrong, are you the only AMC that does AGM?
I would think so. I would think so. I think I've not heard. I might be wrong. I've not heard anyone else having it. If someone else has it, I don't know. But to my knowledge, yes, we've been doing this since the last 11 years. You know. So yeah. Yeah.
So
At
how
least for
come
the longest time, we were the only one. I don't know if anyone's has it in the
anyone's
last couple of years.
So what made you do this? I mean, what was the trick? Because nobody is doing it. Why should I do it? Right? I mean, what was the reason for doing an AGM for unit holders? I mean, I have never heard of it, honestly. If somebody else is doing it, I
Uh,
don't know. I'm sorry, disclaimer.
yeah.
But what
Uh,
made you do it suddenly?
yeah. So I think the reason to do it is to build trust, two-way trust. For us, it's like telling how we manage the money, and if this is right for you, great. If not, then look somewhere else. Because we want to explain the expectation we have from our investor. Also, there are expectations we would have from our investor, and we want to tell them, look, boss, this is the expectation I have from you. If you have any other expectation, then that's not going to really match well. So one is that that expectation matching has to be there, because we want sticky clients. Like I said, we want people who stay with us for the longer term. We don't want fickle money, hot money that's going to come to us or whatever it is. We want money that's staying 5+ years at least. So that's one, is to tell them our expectations. Secondly is to like I said, listen, if you are managing people's money, and sometimes we are managing a lot of their life expenses, I mean the life's earnings, so they have the right to ask me, boss, what are you doing and where is my money being invested, and how are you doing this, and why you not doing this, or why you not doing that. So we can have all types of questions there. So at least it's basically to answer their question. I think answering questions and putting yourself up there is a great way to build wealth. So the inspiration of this was actually Warren Buffett's annual meeting. So
Okay.
we went there, right? We had gone to the Warren Buffett's annual meeting, and I mean, it was just amazing. I mean, it was just being there was amazing. The way these guys answered questions, and listen, after that, if you were on the fence, then because he's answered all these questions so honestly and very transparently, you become a long-term investor. We kind of saw that, and we're like, yeah, this is something that is no one is doing that. Again, you're talking about innovation, so maybe this is one more kind of a
Yeah.
innovation that we probably had. And yeah, I think the profession is only about trust. It's about how you can build more and more trust. That's it. The outcomes will come if you'll stay long enough. I think people have made decent money here. It's about just explaining them and getting the expectations right is the main thing. Once you get that right, and people are get a decent experience from you, I think you get very sticky clients.
Good business lesson for me, Neil. I mean, we at Mira Money also believe the same, that trust is very important. And I'm sure my team who's watching at Mira Money, they will note it down saying that, okay, let's try and do something, if not everything, but at least a few things, few business aspects that you had mentioned. Thank you so much
Yeah,
for that, Neil.
no worries.
Now, one question around, market cycles, right? So, uh, the investment strategies, you able to hear me clear?
Yeah, I can hear
Okay.
you.
Okay, the investment strategies keep changing. I mean, when I mean investment strategies, sometimes value works, sometimes momentum works. What I understand from what you said is you seem to be, okay with not following the momentum thing. So, are you saying with the recent corrections, is there some indication that value investing is back?
I don't know where it had gone anyways. I think it was always there, in a way. So again, there are two ways to look at this. Yeah. So one is the definition of value investing with Benjamin Graham had given, back in the day, is to buy statistically cheap companies. Means you buy a company, you'll see only the statistics. If the P is very low or the PB is very low, you look at all these ratios and they're like, wow, I'm getting this dirt cheap. This is a no-brainer. It's called cigar butt investing, right? It's like having the
Right.
last drag of the cigar, as such. So that was kind of what value investing was like. Can we get these statistically cheap companies? Now in India, I think that's very hard to do, because I think a lot of the I mean, they're cheap for a reason, and that could be management quality, low float, whatever else you have, in the stocks. There's no shareholder activism to unlock value. In the US, at least, you could do that. If you go abroad, there's shareholder activism where they can throw out the management if he's not performing well and all. But here, if the promoter group is holding 75%, boss, like whatever he says he does, so sometimes these companies are cheap for a reason. Again, so that is not the space we are in. What we are looking at is that we're looking at the qualitative factors more so than the quantitative factors. And by qualitative factors, I mean management quality, long term trends. What are the long term trends? What are we looking at? So if we are saying artificial intelligence and all that, do we have some companies which are going through that trend? If we think if that's going to be something big going in the future, do we see streaming becoming bigger 10 years from now compared to where it was now, or TVs becoming bigger 10 years from now, or 10 years from now, or right now? So the answer is pretty clear. Like, streaming, we would think that more people will be streaming or using some of that technology 10 years down the line, and our idiot boxes would probably are already redundant because everyone is on a smartphone or watching it. So we're looking at these things. Is there business growth? Is the business growing? Sometimes the stocks are cheap, but the sector of the business they are in is not growing at all. So you're better off putting your money in a FD, and you'll probably make more money than
Hmm.
investing in the company. So I think what we are saying is that we want quality at a reasonable price. I think that's what we are doing. We are trying to do. We want quality companies. Now, quality, again, like I said, management quality and all these qualitative factors are very important for us when we're investing, at least in India or anywhere else, actually. The quality of the company is very important, and then it has to be at a reasonable price. It doesn't have to be we are very conscious on the starting price you pay. So I think when we talk about us as a value investor, it's because of we are very disciplined about the starting price that we play, because that's what matters. You cannot be chasing stocks and if the prices have already gone up, then you wait, and then there'll always something come along. So, and sometimes you wait. I mean, like I said, we were waiting. We were on 15-17% cash. We were not getting that many opportunities. A COVID like situation comes, and wow, I mean, it does wonders for the portfolio. So it's not like you're hoping for a COVID or any of that. But even in bull markets or whichever market, any market, there are always sectors which are neglected. I mean, you look at any bull market that you want. You look at the dot-com boom. That time, everyone was investing in all the things which are .com or
True.
internet stocks, IT stocks. But if you had invested in Asian Paints and HUL and all that stuff, you would have made a ton of money. But investing
Hmm.
in probably Infosys at the height of the bull market there was not the greatest of ideas. So
True.
again, so you get these neglected stocks, and for a while they probably won't do anything. They will not move because the momentum is so strong in the other stocks. But that's the time you get such value, right? I mean, again, so that's where we hunt, and that's where we hunt for our bargains. During Look at neglected sectors which have great qualities, and they're just being disregarded.
Yeah, so there is serious value in it, and not just there is
Yeah,
something left out,
not
and you
statistical value, not only statistical value, but
there's a
quality
serious
value is
value,
there. Yeah.
qualitative value. Okay, okay. Now, so you did speak about uh, you know FDs, if large cap is, I mean, sorry, if valuations are not there and things like that. So what is your view on this? Is a question on everybody's mind, right? What is happening in small caps, and where are we headed from here on small caps? or should we buy small caps?
Yeah. Like I said, starting valuations matter. Small cap starting valuation right now is obviously a bit elevated. So I would put caution on that. I mean, obviously, if you're an investor for the long term, you're doing your SIPs there, continue doing it. That's fine. They'll always the market doesn't go in a straight line. There'll always be a wave. Will go up and down, ebbs and flows. So again, to make serious money in the market, you will have to go through the bad times. It's very hard to time the market. Oh, I will get off at the top and I'll again invest when it's bottom. That definitely never happens. I've never seen anyone really mastering this timing the market. So you might as well have a long horizon and invest for the long term and continue with your assets. I don't think you should put more money into this space right now. They are a little elevated, for sure. So like I said earlier, starting valuations matter. So starting valuations are actually pretty expensive in some of these things. Obviously, if you're a stock picker, then you will get one-off values in the small cap space also. But in general, I'm saying they are a little elevated valuation.
Okay. So you did mention about timing, right? I also, when I was reading about you before I met you last year also, right? Neil, you were a keen follower of behavioral investing, I mean, biases and things like that. So it would be great if you could tell me few of the biases that you have seen in your investors, people who have invested via the funds, and what makes what by avoiding some biases I can become a better investor. If you could give me which are
Yeah.
those biases I should avoid as to become a better investor, that would be great.
Yeah. So one thing is that it's very hard to avoid any of the biases. We all are prone to all those biases. Yeah. In some way or the other, we all have gone through those biases. And what I'm saying is that uh, be aware of the biases. Sometimes you can't do anything. It's something subconsciously also happens, and you will not know, right? So just be aware of the biases. What behavioral finance teaches you is that how you can become a better decision maker by being aware of the biases that are there. And if you can make one or two great decisions because of that, my god, that'll improve your compounding like great. So you don't fall in traps. So basically, not losing money is actually the best thing you can ever do. Like not losing a lot of your capital by doing stupid things. So if you just have those biases in mind, you will not make those big money decisions, big money mistakes. By avoiding a couple of these big money mistakes, I think that will take care a lot of your returns in the future. So the biggest one I see right now is FOMO. Fear
FOMO.
of missing out, for the last, and I've been seeing this for the last couple of years, that people are just getting into things without understanding. I mean, cryptos was a great example of this. Like people had no clue what was crypto, but everyone was investing in crypto. Man, I'll make a quick buck here. But a lot of people have burned their hands big time. So one is the don't get into the FOMO. Invest in things that you understand, which is easy, because easy things or simple things are the ones that are going to make you money. And things, obviously, there will be hypes, fads and fancies that will always be there. There'll always be fads and fancies in stocks, in sectors, or whatever it is. And sometimes, if it's too good to be true, then it is probably that. So don't go overboard in that. Yeah, keep some money out. I'm not saying that don't do anything. I think a majority of your money has to be in, have a proper asset allocation depending on your risk and all that stuff, and the rest you can play around with 10% and do that. So sorry, coming back to behavioral finance, the one thing behavioral finance teaches that we as human beings, we have a heart and a mind, and we think with both heart and a mind. In
Okay.
all our economic theories, we've thought that human beings are rational people and markets are efficient. But that's not true. Markets are totally inefficient because people are not rational. People think with their hearts. So one example is that if our whole thing is about maximizing money,
Hmm.
maximizing wealth, then how do you explain people giving for charity, or throwing for a birthday party for their child? These are not wealth maximizing things to do. But the smile on your child's face is, there's no money that can buy that. So you
Yeah.
would do that. So sometimes, so what in the markets, what happens is that people's sentiments are all there. Most of the people are thinking with their heart. Very few people are thinking with their mind as such. So you have to basically, you should know what type of the what type of temperament is kind of going on in the market right now, and you should just be aware of that. Boss, I don't want to fall in this trap, like a herd mentality. A lot of people fall into the herd mentality bias, where you just follow everyone blindly because, oh, okay, if you are wrong, we all are wrong together, and if you are right, we are all right. So there's no regret then. When you follow the herd, there's no regret. So that's the best thing about, I mean, that's why people follow herd blindly, because there's no regret, because galat jayenge to saath mein hi galat jayenge.
Abhi jaye.
So when that herd mentality is strong, and you can actually see it in a lot of things, like just if you just keep your eyes and mind open, you go to parties and all, people are keep talking about one or two things, then there's herd mentality going there. There's something that you should at least do more homework on that. And secondly, human beings as such are lazy, and we are greedy. Lazy because we're always looking for the shortcut to do. Today, how many people, like if you want to lose weight or something like that, the biggest thing is to go to the gym, work out, eat like soup and greens and all that stuff, and over a year or so you will see some change. But people want to go to all these crazy diets. Today I've heard that there are pills also, that fat burning pills and all that. So people are looking for shortcuts, for example, right, to make money or to do anything. So, and money is also one way to do shortcuts. So that's why day trading and all becomes so interesting, because at the end of the day, you know what your profit or loss is. Investing, I'm saying, boss, 5 saal ke, at least 5 years you invest. People are like, boss, 5 years ke, I mean, who has a lot of people cannot wait for 5 years. They see people daily getting money or whatever it is, they want to go through that. Secondly, people are greedy. So today, Anand, if I offer you one 8-inch pizza and one 12-inch pizza, and I say, boss, they're the same price, which one will you choose?
12-inch.
12-inch, right? Most people will choose the 12-inch. Even if you're not hungry, you're greedy, right? I'm getting more for that much same price. I will to take it. Yeah, screw it. I mean, whatever
Yeah.
I'll do, I'll overeat. Then I'll be greedy about it. So people are generally greedy and lazy, and we all are like that. So just understanding our own self, understanding human behavior, and that it's actually very interesting. And this is the only field. I think investment is the only field where a lay person without any high IQ or anything can become great investors, as long as that they just control their urges, they control their temperament. So today, if you want to become a scientist or a nuclear scientist, you have to, or doctor, you have to give so many exams, study for half your life, and then you'll hopefully become something after good 30-40 years. But here, if you just understand the behavior or the psychology of investors, or you understand your own psychology, that's all you need. You just need to hold your temperament right, and you can make a lot of money here. So I mean, even so, that's why investment is a great field for people who can control their urges, and behavioral finance is a great way if they want to read about these biases, control that one or two mistakes. If you can avoid, make better decisions, I think that can take you a very long way. So behavioral and finance is a very important field to be successful, I think, even for lay investors, especially for lay investors.
Especially for, so now, I mean, does it come by learning, or being a little, after learning, be a bit more conscious about it? That will help, right? I don't need to go deep dive into understanding
Just
all
be
this.
conscious, just understand the biases, just understand there's not much you can do about it. Yeah, you can just make better decisions about it. So just understanding the biases is very powerful, because even if you catch one bias, oh, this is this bias that's going on, maybe I need to be a little careful about it, then you will deep dive into it instead of going full on into it, and then you might find, okay, this is really not that great, and it not only in investment, it can happen anywhere, I mean, in your own life. Just a small example I'll give you. There's a bias called endowment bias. Okay, what you have is more useful, and what somebody else has not useful. So if I want to sell a house, I'll sell it at 100, but I want to buy the same house, I don't want to give a pretty penny above 60 rupees, right? So what you have is more precious than what somebody else has. So that's why you fall in love with your stocks. One of the things is that if you have it in your portfolio, you see it in your tickers that mere paas ye stock hai, you will be in love with them. A lot of people are in love with them, then nothing happens, and all the positive news they will overreact to, and all the all the negative news they'll underreact to, so that's one. So again, in my personal life, what happened, last year we were getting our house done, yeah. We were renovating our house, and me and my wife had gone to this furniture store to see some furniture and all that, and there was this really good table, and I really liked it. I'm like, listen, this look really good in our house and whatnot, and my wife is like, no, I don't like it at all, and we were like arguing there a little bit. No, I like it, I don't like it. So the shopkeeper said that, why you all arguing, why don't you just take this, leave it in your house for 10 days and see how you feel after that. Okay.
Okay.
And I knew behavioral finance, I knew endowment effect would be there. I knew the minute it comes to my house, 9 out of 10 times is not leaving my house, because once we find a place for it, once we figure it out, we do that, after a week it becomes part of my endowment. We are already loving it then, so it's very hard for those things to go away. So again, when it comes to TVs, refrigerators, all these things, the salespeople, they understand endowment bias really good. That's why they'll say free trial, free period, to keep it in your house for 15 days. Then you tell me if you like it or not. Boss, 9 out of 10 times you will keep that product. So again, it's in everyday life. It's these things are there. So you can make because I knew the endowment bias, I got the better of my wife this time. So she still makes that table. By the way, we got it, but well, it's been a year and a half and it's not going anywhere.
Absolutely. That's a great example. So you're saying it's there as a part of our life. Biases are always going to be there. Be a little conscious about it.
Yeah.
Avoid it, because money saved by not getting into losses or whatever is also money earned.
It's about avoiding the big mistakes. I think that's what behavioral finance is. That don't make that big mistake. Don't make that big mistake that can wipe out your capital. Maybe you and that's all. I mean, you need like a couple of these, like 2 times you avoid big money mistakes in your life. That means you've pretty much done really good after that. I mean, just avoiding some disastrous, grave errors. I think that's what it's helped me with. I mean, it can help others in different ways. For us, it's all about like avoiding the downside, as you call it.
Okay.
Downside
So
protection is with that.
there are 2 more questions, Neil, before for you. One, is trading good or it's a great wealth destroyer?
Hmm. So, listen, I mean, trading is not for everyone. Let's put it this way. I don't think it's for everyone. I've not seen too many successful traders. There are a few successful traders, and yeah, I mean, in the end, it's all about the luck. Now, if you want excitement and if you want to get lucky sometimes, then yeah, trade or go to the casino. I think it's just one of the same things. I mean, it's something that different. At least in the casino, you'll have fun playing. At least you'll be doing something. So you rather go to casino sometimes. For a lot of people, for a lay person, I think just investing is great. I mean, in the sense that you depend on what you want to do. Like you want excitement, and trading is your thing. If you don't want excitement, you want to make money, then investment is your thing. So I would think for a lot of people, trading can be quite dangerous. And yeah, I mean, if you're looking at excitement, then there are other ways to get excited too than just trading. So I can tell you a few things which are more exciting than trading. So if you're looking for excitement, then yeah, do it. But if you're looking for wealth creation, then I think investing is absolutely key.
Okay. But then how do you make, investing exciting, right? I mean, I know, I understand that trading is playing against odds. There are 99% people don't make money, or 90%, as SEBI said. But how do you make investing exciting? Because as a young, let's assume that I'm that 25-year-old guy, just passed out of the school or college, and I'm like, I'm driving for action. I'm waiting for action. Investing doesn't give me that. While it's a great wealth creator, but what do I do about this urge of mine?
Yeah, I think there's nothing. Investing is supposed to be boring, and it will be boring. I don't think it can be exciting in my view. Okay, I think there are some things like, boss, you're a student. You have to give these exams. Means you have to do it. So you have to study before that. You have to grind with it, and you have to. There are certain things in life which don't come easy. and there's nothing in life that comes free, and some
True.
things you have to work for. Again, there are times, why are people so attracted to the market? Because there are times where in a year or 2 years you hear everyone making money because the markets have gone up, but you don't hear about how many people are losing that money also when that thing turns. So in a sense, there's no shortcuts. I feel there are no shortcuts for making money. I mean, if there was a shortcut and if it's that exciting, people would not do their regular jobs and they'll just do this, so I think in a way I'm glad that it's not exciting, and people will have to go through that grind to actually get somewhere. I mean, they have to have that patience, like I said. Holding your urges and keeping your temperament in check, that's the difference maker. That's the X factor in making money in the markets. And I think yeah, if we all were excited and we all were doing the same thing, then markets wouldn't give those returns to people. So I think I'm happy that it's not exciting, and it should be boring.
It should be boring. Okay. Okay.
Yeah.
I mean, I think we're last 5 minutes. Couple of questions, Neil, or maybe last question or also. So the thing is, this the general question where we are seeing elections coming up, results can be whichever way, and I have some money lying aside. Should I go big on large cap? One, should I invest? And if I were to invest, what would you do if you were an investor, not an advisor, not the CEO of PPFAs?
Yeah, yeah,
What would you invest in large cap, mid cap, small cap? Sorry.
yeah. So again, election is just a thing that will come and go, So I don't think election should be that big a part in your decision making, because again, and markets have got this completely wrong most of the time. I'll just recently, okay, when the first time that Trump was going to come to power, everyone said that, boss, if Trump comes to power, markets are going to crash, and how? Trump came to
Yeah,
power, we saw like the biggest bull market.
true.
Brexit happens, markets are going to crash, and what is the world going to come down to? Brexit happened, nothing happened, things went normal. So election as such is not that greater event as such. Again, if there's at the most it can give you a couple of days. The market can be really volatile. If you're a buyer, you can get opportunities at that point, if your stocks come to that level. But as an investor, I don't think you should really care about it. So you should, I think markets are not that cheap also right now. I mean, they're not that cheap that you do probably a lump sum investment as of right now. Again, lump sum is fine if you want 7 to 10 years, you're going to hold it and all that. But that's good way of saying it. But honestly, people's psychology is such that if you stagger it, they are much better. They're happier
True.
of getting that average return. So SIP, STP is a better way. Just not for that you'll get better returns than a lump sum investment right now. It's just for your own behavioral thinking that, oh, I spread my thing out, so if the election came up or down, I have averaged my cost and I will be happy with that. So I think election should not be a factor in decision making, and yeah, stagger your investment for the next 6 to 8 months is what I would do.
Okay. And any views on which market cap would you go big on, and which will you avoid if
Yeah.
you can disclose?
So yeah. So I'm extremely biased on this. So that's why I'm going to tell you that one of the biases that I run a mutual fund. All my
Hmm.
money is in a mutual fund, in my mutual fund. I am a promoter of the mutual fund, and I'm also getting a salary from the mutual fund. So we
Hmm.
run one strategy in for our equity, which is a diversified strategy or a flexi cap strategy. Again, I've been putting, and that's the reason we don't have any other funds except for the flexi cap, is because in the flexi cap you can keep going up, down the market cap as and when you feel is right. And it's, again, as the name says, it gives a great flexibility, and obviously right now I think a lot of the flexi caps will also be a little large cap bias, because large cap is giving you probably more value than mid and small cap. That doesn't mean the whole mid cap and the whole small cap is extremely expensive. There are values even in
Yes.
those things, so again, we don't force, then you're not forced to invest all your eggs into the small and mid cap, which I think is a little more expensive than the large cap basket. So you go large cap heavy when you think large cap is giving you better value, and Once you again, there have been times where mid and small cap had crashed, and that's the time to buy into mid and small cap, is when they are completely neglected and you can get as much volume as you want and you're not chasing prices. So I would go for a flexi cap strategy.
You will go. Final question, Neil. I'll then let you go. The question is, uh, PPFAs, the Flexi Cap Fund especially has become a very large fund. It's what, 60,000 crores now?
Yeah.
60,000 crores. So, what lies ahead with them? And because the sizes have grown significantly. So what do we expect going forward from PPFAs? Is there a change in strategy? How are you trying to curtail? Are you trying to curtail inflows? Is there anything that of that sort? Because 60,000 crores is a pretty large sum, right?
Uh, it is and it is not. And I'll tell you
Okay.
both why. It is
Mhm.
not is because we run only one strategy, 60,000 crores, everything's in one fund. Other mutual funds run 10, 12 strategies, and it's 1,50,000 or more. They're managing way more than us in the equity space. But
True.
as an equity fund house, you cannot buy 10% more. You can't buy more than 10% of the share of that stock in your portfolio, right? So in invariably you're buying the same stock either at 60,000 in one fund, or if I divide that into say five funds of 10, 12,000, I'll be still be
Right.
buying the same stocks in all of those. So I don't see size as a concern as such. I think as the market, even the market, Indian markets are growing very well. So as long as we grow with that, I don't see any reason to stop inflow or this affecting our performance or anything. What does happen? There are a couple of things that will happen. Is one is that today we so again, what we like to do is have 25 to 30 stocks. That's what our perfect diversification is. I think that's where you get meaningful allocation to your best ideas with 25 to 30 stocks. What will happen is that 30 will become 35 or 37, because the smaller cap stock, there'll be a long tail of small cap, because we cannot buy lot more in one particular small cap, because even if we buy some, it'll be like 0.5% or 1% of the overall portfolio if you're managing 60,000. So you'll have
Longer
four
day.
five more smaller cap names which will have a smaller allocation. So that will change in the sense that the tail will get slightly longer. But I don't I really don't see any problem with the size as such as of right now.
So no stress test issues and all that. I mean,
No, we don't have small cap and mid cap, so we didn't have to do stress test.
stress test. Okay. Okay. So that's wonderful to hear, Neil. And again, I would like to thank you for sharing your views. It was wonderful, especially the behavioral part. I think that's going to be something new, which people will really love it. And glad you could make it today. And hope to see you soon in Bangalore, Neil.
Yeah, thank you so much, man. Thank you so much for inviting me, and I hope I could add a little value to all our viewers. So thank you, everyone. IPL was going on, and if y'all stayed to hear me back, I'm very grateful for that.
They
Thank you.
have. They have. Thank you. Then you have a good
Thank
night.
you.
Bye bye.
Okay. Bye bye. See you.
See you.